Why did I choose swing trading over day trading? This is a very good question, and I get asked this all the time, so listen up. So, number one, trade frequency. A lot of people say these hypothetical things, or they say it as in, I need to take less trades in the week, I need to follow my rules, I need to follow my plan. But the time frame of entry allows them to overtrade and over risk on the week. So let me just give you a mathematical scenario. Whereas if I, as a swing trader, say I'm going to risk 2% on a setup on a funded account for an evaluation, or even 3%, for example, let's say 3%. A lot of people are saying 3% on one trade because they take it with surface level knowledge and information that they use for their own system, like a 1 minute trader, for example. Now, the 1 minute trader, mathematically, there's a lot more setups that are going to appear in the week because it's just logical. If you're trading the 1 minute, you have 60 candles in 1 hour. Whereas if you're trading the 1 hour, you only have 24 candles in the full day, right? Even so this is just maths. You will have more entries on the 1 minute time frame. So a swing trader saying I'm going to risk 3% on my eval on one trade, it's completely different to a 1 minute trader even risking like 1%, 1.5%, because the swing trader is going to get less opportunity in the week. So it makes sense that if you are going to do that on an evaluation, you're safer on a swing trade. That means that if I do a swing trade, but it's 1 to 2 risk to reward, but I risk a little bit higher on it, especially for an eval, I actually, one, have a lower chance of being in a losing streak that lasts longer, but I could also follow my rules better because my setup's going to appear less. So you can't just be like that guy that says, yeah, I'm going to take less trades in the week, but you trade the 1 minute time frame and everything that appears, you just take it. So swing trading aligned better with me and the way that I live my life and the way that I trade, because my setup just mathematically appears less in the market because there's less higher time frame candles. Number two, my weekly bias is on the trade. So if I'm saying I want the week to trade higher, then all I need to do is replicate that in a swing trade. Remember, the essence of what day trading or trading in general is that you buy or you sell. So all I need to do is lower the chances of the risk of error. This is the thing. People forget about it. When you're trading, you have so much error that goes in the way. If you say, okay, I want today to go higher, but then you have such a small stop loss and you have this on the line and you have this on the line, whatever, you just wanting the day to go higher, you're actually lowering the chances of you winning. Whereas if I say I want the day to go higher, but I have a larger stop loss, I have, a small target, for example, then all I needed to really do was be right of the daily candle. My problem with trading lower time frames is the risk of ruin is a lot larger, especially if you have larger capital. Because if you're saying, for example, I want today to trade higher and you've got a 5 pip stop loss, then even if today trades higher, you've got a much higher chance of losing. So my point, before people get upset, is not that day trading doesn't work, but I think it's a lot easier to be profitable as a swing trader because there's less of a test on your own psychology, your own mental framework, and you've got a lower chance of being in a longer losing streak. And all you really need to do is predict either the weekly or daily direction. If I'm trying to predict the weekly direction, I think is going to be a buy, and I have a larger stop loss, then as long as the week was a buy, most likely I'm going to win. Whereas if I'm a day trader and I think the week's going to be a buy, but I have a tiny stop loss and I'm trading a very low time frame, then even if the week is a buy, there's loads of chances that within that consolidating price action or a day where the market retraces a little bit, I've lost the trade. So I'd rather take less opportunities in the week, profit more, than take more opportunities in the week and profit less.
Here's how you can start trading smart and finally pass your prop firm challenge. If you're 18 to 35, listen up. First thing you're going to do is grab the PipsGravity Mastermind Trading Plan, link in bio. Once you're in, go straight to the market structure section so you can finally read the charts like a pro. Next, dive into the liquidity and fair value gap chapters. This is where you'll learn how the big banks move the market and how to catch the move before it happens. Then, use our entry technique guide to time your trades with sniper accuracy. No more random entries, no more gambling. Finally, follow our trade management steps to protect profits and scale your account steadily. If you're tired of blowing accounts and failing challenges, this is your wake-up call. PipsGravity Mastermind. Get it now and start trading like the top 1%.